What's up, Amelia from Revenge Rewired here. Today's story, absolutely wild. Hit subscribe so you never miss one. The mediation conference room had the kind of aggressive neutrality that probably cost $400 an hour. Beige walls, generic landscape art, a table polished to such perfection that I could see my own uncertain reflection staring back at me. Across that table, my wife Sarah sat with the posture of someone who'd already won. She wore her serious business outfit, tailored black blazer, minimal jewelry, her dark hair pulled back in a way that said competent professional rather than the woman who used to dance around our kitchen in my old college t-shirts. That woman felt like a lifetime ago. Her attorney, Monica Reeves, was a shark in Armani. ID learned she charged $700 an hour and had a reputation for crushing opposing parties in divorce cases. She slid a single page across the table with the kind of casual confidence that comes from holding all the cards. "Mr. Thompson," she said, her voice warm enough to seem reasonable, but cold enough to carry the underlying threat. "My client is offering you $75,000 as a complete settlement of all marital assets." I looked at the number. It was typed in a clean font, professionally formatted, as if that would make it more legitimate. $75,000 for 8 years of marriage. For helping Sarah build her company from our kitchen table. For the nights I'd stayed up helping her debug code for the weekends. I'd spent at trade shows manning her booth while she networked for the first 5 years when I was the only income while she built her dream. "That's a generous offer," Monica continued, "especially considering the company's current financial situation." Sarah leaned forward slightly, and I saw her practiced the expression sympathetic, a little sad, definitely sincere. "David, I know you think Dreamweave is worth something, but the reality is, we're barely staying afloat. The tech industry changed. Our product didn't scale the way I hoped. I'm burning through savings just to make payroll every month. Your financial disclosure shows the company is worth approximately $50,000, Monica added, pulling out a document, net assets after liabilities. "My client is offering you more than the company is worth, plus giving you the Toyota and half the retirement accounts. You'd walk away with more than your fair share." I let my hand hover over the settlement offer. "Let them see me consider it. Let them think this might actually work. I need to see the company's financials," I said slowly. "The actual books, tax returns, profit and loss statements, bank records." Monica's smile tightened fractionally. "We've provided financial disclosures as required by—" "I want to see the actual QuickBooks file," I interrupted. "The bank statements, the contracts with clients. If the company is really failing, you should have no problem showing me the documentation." Sarah's jaw tightened. "David, this is insulting. Are you accusing me of lying?" "I'm asking to verify what you're telling me," I said. "If Dreamweave is really worth $50,000 and losing money, prove it." There was a long pause. Monica exchanged a glance with Sarah, quick, almost imperceptible, but I caught it. The kind of glance that passes between people who know they're hiding something. "We'll provide additional documentation," Monica said smoothly, "but I encourage you to seriously consider this offer, Mr. Thompson. Litigation is expensive. My client is being generous. If you reject this and force us to go to court, you might end up with far less." I picked up the settlement offer, folded it carefully, and put it in my jacket pocket. "I'll think about it," I said. Sarah's smile returned, relief flickering across her face. She thought I was wavering, thought she'd convinced me. What she didn't know was that 3 months ago, I'd stopped being the trusting husband and started being a man who asked questions. It started with a bottle of champagne. We'd been separated for 2 months, living in different apartments while the lawyers worked out the divorce details. I was scrolling through Instagram one night, a habit I'd developed during our separation. That masochistic impulse to see what Sarah was doing without me when I saw her post. It was a photo of her and her 2 co-founders, Rachel and James, standing in what looked like a trendy downtown restaurant. They were holding champagne flutes, grinning at the camera. The caption read, "Celebrating another milestone quarter with the Dream Team. #StartupLife. #NeverGiveUp. #Dreamweave Community. Another milestone quarter. Another milestone quarter." I stared at that phrase for a long time. Sarah had spent the past 2 months telling me, through her lawyer, that Dreamweave was failing, that she was struggling to keep the lights on, that the company I'd helped her build was effectively worthless. "But you don't celebrate milestone quarters when you're losing money every month." I screenshot the post and sent it to my friend Kevin, who ran his own software company. "Does this look like a failing business to you?" Kevin called me within 5 minutes. Dude, that's the vault. You know how much it costs to rent their private room? Like $3,000 minimum. Nobody drops that kind of money if they're bleeding cash. The next morning, I did something I wasn't proud of but couldn't stop myself from doing. I started investigating. Dreamweave Technologies had a website. Of course, I'd helped design the original version back when it was just Sarah's idea. The current site was far more sophisticated: professional photography, slick animations, case studies from major clients. I recognized some of the logos. Boeing, Microsoft, a major healthcare network. These weren't the kind of companies that worked with failing startups. These were enterprise clients paying enterprise prices. I clicked through to the About Us page and found something that made my stomach drop. A news section. The most recent article, dated just 6 weeks ago, announced that Dreamweave had been named to Seattle's Fast 50 lists, the fastest growing private companies in the region. You don't make the Fast 50 list when you're losing money. I called my attorney, Robert Martinez, immediately. I think my wife is lying about the company's value, I said. I think Dreamweave is worth significantly more than she's disclosed. Robert was quiet for a moment. What makes you think that? I told him about the Instagram post, the vault celebration, the client logos, the Fast 50 recognition. That's circumstantial, Robert said carefully. But it's enough to warrant investigation. I can request additional financial discovery, but if you really want to know what's going on, you need someone who speaks their language. You need a forensic accountant. How much does that cost? A good one, $30,000 to $50,000 for a full investigation, maybe more if the company's finances are complex. He paused. But David, if you're right, if she's hiding significant assets, it'll be worth every penny, and the court will make her pay your costs. I thought about the settlement offer. $75,000. If Sarah was lying, if Dreamweave was actually successful, I was looking at potentially hundreds of thousands in hidden marital assets. Find me the best forensic accountant in Seattle, I said. I met Patricia Chen in her downtown office 4 days later. She was in her mid-50s, with silver-streaked black hair and the kind of sharp eyes that seemed to see through balance sheets into the soul of a business. Your attorney sent me the preliminary financial disclosures, Patricia said, gesturing to a folder on her desk. According to these documents, Dreamweave Technologies had gross revenue of approximately $400,000 last year, with net losses of $85,000. Your wife's position is that the company is hemorrhaging money and effectively worthless. But you don't believe that, I said. Patricia smiled slightly. I didn't say that. What I'm saying is that these numbers tell a story, and I need to determine if it's true or fiction. She opened the folder and pulled out a printout of Dreamweave's website. Companies on the Fast 50 list are typically growing at 25% or more annually. They don't get there with $400,000 in revenue. That's not fast growth, that's barely sustainable. So she's lying. Let's say the numbers don't add up, Patricia corrected, which means I need to dig deeper. With a company like this on S-Corp with multiple shareholders, there are many ways to hide revenue. She could be running personal expenses through the business, shifting income to other entities, delaying revenue recognition, or simply maintaining 2 sets of books. 2 sets of books. That's illegal, isn't it? Very illegal. It's fraud. Patricia's expression was serious, which is why, if we find evidence of it, this becomes more than just a divorce case. It becomes a criminal matter. Over the next 12 weeks, Patricia conducted what she called a comprehensive forensic analysis of Dreamweave Technologies. Through Robert's legal discovery requests, she obtained *3 years of tax returns, *bank statements for all business accounts, *credit card statements, *copies of major client contracts, *accounts receivable and payable records, *payroll records, *the company's QuickBooks file. But Patricia didn't stop there. She also *subpoenaed bank deposit records directly from Dreamweave's bank, requested Sarah's personal bank statements to look for income transfers, analyzed Dreamweave's payment processing records from Stripe and PayPal, cross-referenced client lists with public records to verify contracts, examined Washington state business filings and tax records, reviewed social media posts and press releases for revenue clues. The QuickBooks file they provided is interesting. Patricia told me during one of our weekly updates. It shows exactly what they claimed: about $400,000 in revenue, significant losses. But when I compare it to the bank deposit records, the numbers don't match. She pulled up two documents on her computer screen. Look at this. The QuickBooks file shows $75,000 deposited in March from client A, but the actual bank statement shows deposits totaling $320,000 in March. Where's the other money? I asked. That's what I'm finding out, Patricia said. She pointed to another line. See this deposit for $100,000. It's marked as loan from shareholder in the QuickBooks file they gave us. But when I trace it backwards, it's actually a payment from Microsoft for software licensing. It's not a loan, it's revenue. Over the following weeks, Patricia pieced together what she called the real story. Dreamweave Technologies wasn't failing, it was thriving. The company had three main revenue streams. 1. Software licensing to enterprise clients, $1.8 million annually. 2. Consulting services and custom development, $800,000 annually. 3. Training and support subscriptions, $200,000 annually. Total annual revenue, $2.8 million, but the QuickBooks file they provided shows only $400,000, I said, stunned by the numbers Patricia was showing me. Because they're maintaining two sets of books, Patricia explained. There's the divorce QuickBooks that they provided to your attorney, the one that shows a failing company, and then there's the real QuickBooks file, the one they use for actual business operations, the one that shows their true financial picture. How do you know there are two files? Patricia pulled up a technical document, metadata. Every QuickBooks file has metadata showing when it was created, when it was last modified, what the file name is. The file they provided was created 3 months ago, right after you separated, and it's named DW_divorce_financials. QBW, that's not what you name your primary business file. She showed me another document. I also subpoenaed their cloud backups from their IT service provider. The real QuickBooks file, the one named Dreamweave_Master KW, shows the actual revenue. It's hosted on their company server and backed up daily. They didn't think anyone would look for it. Can we get that file? Already did, Patricia said with satisfaction. Once I knew it existed, your attorney subpoenaed it directly from their IT provider. Sarah's lawyer tried to block it, which just confirmed we were onto something. The judge ordered it produced. Patricia opened a spreadsheet showing months of data. This is the real picture. Dreamweave had $2.8 million in revenue last year. After legitimate expenses, salaries, overhead, software costs, they netted about $900,000 in profit. As a 50% shareholder in the marital estate, you're entitled to half of the company's value. What's it worth? Based on the revenue, profit margins, and comparable sales in the tech sector, I'd value Dreamweave at approximately $4.5 million. Your marital share would be $2.25 million. The number was so large I couldn't process it. Sarah had offered me $75,000 for my share of a company worth $4.5 million. She committed fraud, I said slowly. Yes, Patricia agreed. She created false financial statements with the intent to deprive you of marital assets. That's fraud. It's also perjury if she testified under oath about these numbers, which I assume she will. She closed the laptop and looked at me seriously. David, this is going to get ugly. When we present this evidence, Sarah is going to face consequences beyond just dividing the assets. The court doesn't take kindly to this level of deception. She could face sanctions, penalties, even criminal charges if the DA gets involved. I thought about the 8 years we'd spent together, the dreams we'd shared, the woman I'd loved, and then I thought about her sitting in that mediation room, smiling at me, offering $75,000 while hiding millions, asking me to walk away from everything I'd helped build. Let's go to court, I said. The courtroom was smaller than I expected, but Judge Rachel Brennan had a presence that filled the space. She was a formidable woman in her late 50s, with a reputation for being absolutely merciless when it came to financial dishonesty in divorce cases. Sarah and Monica sat at the respondents' table, confident as ever. Sarah had testified earlier that morning, repeating the same story. Dreamweave was struggling, barely afloat, worth almost nothing. She'd looked sincere. She'd even gotten a little emotional describing how hard it was to keep the business going. Now it was our turn. Your Honor, Robert stood. We'd like to call Patricia Chen, our forensic accounting expert. Patricia took the stand with her laptop, a thick binder of documentation, and the kind of calm confidence that comes from knowing you have the truth on your side. Ms. Chen, Robert began, please state your qualifications for the court. I am a certified public accountant and certified fraud examiner with 23 years of experience in forensic accounting. I've testified as an expert witness in over 90 cases involving business valuation and financial fraud. I specialize in technology company analysis and hidden asset discovery. And did I retain you to investigate Dreamweave Technologies? You did. On March 15th of this year. What did you find? Patricia opened her laptop, and the courtroom screen came alive with a presentation. I watched Sarah's face carefully. She was maintaining her composure, but I saw her hand tighten on her attorney's arm. I found that the financial statements provided in discovery do not reflect the actual financial condition of Dreamweave Technologies, Patricia said clearly. The company is not failing. In fact, it generated $2.8 million in revenue last year, with net profits of approximately $900,000. The courtroom went completely silent. Judge Brennan leaned forward, her eyes sharp. That's absurd, Monica said, but her voice lacked its usual confidence. Your Honor, we've provided complete financial. Let the witness finish, Judge Brennan said coldly. Patricia pulled up her first exhibit. The respondent provided a QuickBooks file showing annual revenue of $400,000 with significant losses. However, I obtained the actual bank deposit records for Dreamweave's business accounts directly from the bank. These records show deposits totaling $2.8 million over the past 12 months. The screen showed a side-by-side comparison. The QuickBooks file on the left showing minimal revenue, the bank statements on the right showing substantial deposits. How do you explain this discrepancy? Robert asked. The respondent is maintaining two separate QuickBooks files, Patricia explained. She pulled up the metadata analysis. The file provided in discovery was created on February 3rd of this year, 3 weeks after the parties separated, and is named DW_divorce_financials. This is not a standard business file name. It was created specifically for this divorce proceeding. She pulled up another screen. I subpoenaed the actual business QuickBooks file from Dreamweave's IT service provider. This file, named Dreamweave_master, shows the true financial picture. It's backed up nightly and contains years of historical data showing consistent revenue growth. Monica was on her feet. Your Honor, this is privileged business information that— Sit down, counsel, Judge Brennan said, her voice like ice. Your client opened the door to this by claiming the business was worthless. Continue, Ms. Chen. Patricia pulled up a detailed revenue analysis. Dreamweave has 3 main income streams. First, software licensing to enterprise clients. I verified contracts with Microsoft, Boeing, and Providence Health, totaling $1.8 million annually. Here are the executed contracts, the payment schedules, and the bank deposits matching those payments. The screen filled with contract excerpts and corresponding bank deposits, each one highlighted and cross-referenced. Second, consulting and custom development services, generating approximately $800,000 annually. Here are the service agreements, the invoices, and the payments received. More documents appeared, each one damning. Third, training and subscription services at $200,000 annually. These are recurring monthly charges that I traced through Stripe payment processing. Here are the transaction reports showing consistent monthly income. I glanced at Sarah. Her face had gone completely white. She was whispering urgently to Monica, who was frantically typing notes on her laptop. Ms. Chen, Judge Brennan interjected. Are you saying the respondent deliberately created false financial statements? Yes, Your Honor. The evidence is clear. The divorce QuickBooks file was created after separation and contains fabricated data that doesn't match the actual bank deposits, client payments, or business operations. Real revenue was either omitted entirely or misclassified as loans, capital contributions, or other non-revenue items. Patricia pulled up another exhibit. For example, in March of last year, Microsoft paid Dreamweave $100,000 for software licensing. In the real QuickBooks file, this is correctly recorded as revenue. In the divorce file provided to opposing counsel, this same transaction is recorded as a shareholder loan, making it appear as debt rather than income. This is fraud, Judge Brennan said flatly. Yes, Your Honor, Patricia agreed. It's also perjury. The respondent testified under oath this morning that Dreamweave generated only $400,000 in revenue last year. The bank records prove that's false. She testified the company is losing money. The profit and loss statements from the real QuickBooks file show $900,000 in net profit. Robert stepped forward. Your Honor, we have one more exhibit. This is a business valuation prepared by Ms. Chen based on the actual financial data. Patricia pulled up the valuation report. Based on revenue of $2.8 million, profit margins of 32%, growth trends, and comparable sales in the Seattle tech market, I value Dreamweave Technologies at $4.5 million as a marital asset, with Mr. Thompson entitled to a 50% share. His portion is worth $2.25 million. Sarah made a sound, not quite a gasp, but close. Monica had her head in her hands. Ms. Reeves, Judge Brennan's voice could have cut glass. Would you like to explain why your client offered Mr. Thompson $75,000 for his share of a company worth $4.5 million? Monica stood slowly. Your Honor, we believed the valuation was accurate based on fraudulent financial statements your client created. Judge Brennan interrupted. Don't insult my intelligence, counsel. Your client committed perjury in my courtroom. She created false documents with the intent to defraud her husband of millions of dollars in marital assets. She turned to Sarah. Miss Thompson, stand up. Sarah stood, shaking visibly. You lied to this court, Judge Brennan said. You created false financial records. You testified under oath to numbers you knew were fake. You attempted to steal millions of dollars from your husband by convincing him your company was worthless when it's actually highly profitable. Do you understand the seriousness of what you've done? Sarah's voice was barely a whisper. Your Honor, I can explain. I don't want to hear it. Judge Brennan cut her off. Here's what's going to happen. First, I'm granting Mr. Thompson's petition for an equitable distribution of all marital assets, including his 50% share of Dreamweave Technologies, valued at $2.25 million. You have 90 days to either buy out his share at that price or arrange for the sale of the company. Sarah's knees nearly buckled. Second, I'm sanctioning you $50,000 for litigation misconduct, payable to Mr. Thompson. Third, you will pay all of Mr. Thompson's attorney fees and forensic accounting costs. Fourth, I'm referring this matter to the Washington State Bar for investigation of Ms. Reeves' conduct in presenting fraudulent evidence. Monica went pale. And fifth, Judge Brennan continued, I am referring this case to the King County District Attorney's Office for investigation of perjury and fraud charges. Whether they prosecute is up to them, but you should expect that conversation. She banged her gavel. This hearing is adjourned. Ms. Thompson, I suggest you hire a criminal defense attorney. The legal settlement took 6 weeks to finalize. Sarah's attorney, a new one, after Monica withdrew from the case, negotiated a buyout rather than forcing a company sale. Sarah had to secure a business loan to pay me $2.25 million for my 50% share of Dreamweave. Combined with the sanctions, attorney fees, and forensic accounting costs, the total cost of her deception was approximately $2.5 million. The criminal referral went nowhere. Ultimately, the district attorney's office reviewed the case, but decided the civil sanctions were sufficient punishment. Sarah wouldn't face criminal charges, but she would face consequences in other ways. The Washington State Bar sanctioned Monica Reeves with a public reprimand and mandatory ethics training. Her reputation in the local divorce law community was destroyed. I later heard she'd moved her practice to another state. Sarah's business reputation suffered as well. Word spread quickly in Seattle's tight-knit tech community about what she'd done. Several major clients quietly discontinued their contracts, unwilling to be associated with someone who'd committed fraud, even in a divorce case. The last I heard, Dreamweave's revenue had dropped by about 30%. As for me, I took the $2.25 million and walked away from the tech industry entirely. I'd spent 8 years helping Sarah build her dream, and I was done building other people's companies. I bought a small house outside Seattle with a view of the mountains. I started a consulting practice working with early-stage startups, helping founders avoid the mistakes Sarah and I had made both in business and in partnership. I made it a point to always recommend prenuptial agreements and clear operating agreements with vesting schedules. Patricia Chen and I stayed in touch. She sent me referrals, occasionally, other divorcing spouses who suspected their partners were hiding business assets. I'd help them understand the technical side of their partner's company, and Patricia would find the money. We made a good team. 6 months after the final settlement, I was having coffee with Kevin when he showed me his phone. It was Sarah's LinkedIn profile. She'd updated her title, founder and sole owner, Dreamweave Technologies. Sole owner, Kevin said. That must sting. I thought about it. Sarah had the company she'd always wanted, completely under her control, no partner to answer to. But it had cost her $2.5 million. Her marriage, several major clients, her reputation, and her attorney's career. I helped build that company, I said slowly. I believed in her vision. I supported her through the early years when it was just an idea, and she tried to convince me it was worthless so she could steal my share. Do you regret fighting for it? Kevin asked. I thought about the settlement offer, that single page with $75 typed in clean font. I thought about how close I'd come to just taking it, walking away, accepting Sarah's story because I loved her and wanted to believe her. And I thought about Patricia's presentation in court, the side-by-side comparison of fake financial statements and real bank deposits. The moment Sarah's face went completely white as her lies were exposed in public. Not for a second, I said. The truth is worth fighting for. Especially when it's hidden behind someone you love, telling you confident lies. Sarah had gambled that I wouldn't question her, wouldn't investigate, wouldn't spend the money on forensic accounting. She'd gambled that I'd just accept her word and walk away. She lost that bet, and I got exactly what I was entitled to. Half of everything we'd built together, valued honestly, paid fairly, proven in court with bank records that couldn't lie. Sometimes justice is expensive. Sometimes it takes months of investigation, tens of thousands in accounting fees, and the willingness to drag the truth into the light even when the person hiding it is someone you once loved. But when you're refacing a settlement offer of $75,000 for your share of a company generating $2.8 million in annual revenue, hire the forensic accountant, get the real QuickBooks file, let the bank deposits tell the truth, and watch their face go completely white when the numbers don't lie.